The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 22nd, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I am absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. Would love to hear from you, 877-927-6648. It's the number you call in on. Now, if you've got a question, but you can't call in, you can always send me an email. Send that early. Send that to Steve at TFN.com, just like Ray did here in Sarasota. Inside that subject heading, if you'd be kind enough to put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Slightly mixed bag out there still. You got the semis off 7 points. The New York Stock Exchange down 4. The Dow's up 17. The S&P is flat. Nasdaq's up 7. Russell's up 7. Gold is up $3. Silver's down 20 cents. Light sweet crude off $1.73. Natural gas up about 15 pennies. The 30-year Treasury printed out at 124.25. That is up 22 ticks. But let's go ahead and begin by taking a look at the charts for the NQ out here. So we're going to switch our panels. We're going to go over that white panel, 8 background sets of charts out here. And what we're going to see is there are bottoming patterns in place for each and every intraday time period out here. I'll just make sure on this. Well, I take that back. The 15-minute and the 10-minute, not so much. But the 30-minute, the 60-minute, the 120-minute, the 240 and the 5-hour time frame each have bottoming patterns as the NQ is pulling back to its bullish structured profile area. That says we should see a bounce. So in the case of the NQ, on a 5-hour basis, it is a TD9 count bottom pattern, and it's also wave number 7. Now, wave number 7 will need a higher low in order to confirm that pattern out here. But the TD9 count, that's in place. This just happens to be the bar following bar number 9 here, which ends at 2 p.m. It won't really matter. So far, that low is going to be the important area to watch. Now, the key area here on the 5-hour time frame chart is that red oscillator and change line. That's currently printed at 12,184. That number is going to go up or down depending on how price moves. So use that as a basic guideline. If price closes above that oscillator and change line, that's going to suggest a further rally up to the 12,404, 12,308. So 12,308 to 12,394 is what we would call that. In the case of the 240-minute time frame chart, it also has a TD9 count bottom. It's also right now trying to attempt to form a Rhodes Momentum Indicator bottom. What we can see here is price ran into resistance at its red oscillator and change line and the top of its daily profile. Therefore, the key number to be watching here is 12,177. Well, that works because our 5-hour time frame chart, the oscillator and change line is up at the 12,184 level. So if we close above the 5-hour oscillator and change line, that's going to suggest in the case of the 4-hour chart, its price target being 12,388. So we got 12,308, 12,388, 12,394. In the case of the 2-hour time frame chart out here, what we've got is a Rhodes Momentum Indicator bottom, and price has resistance at 12,158. So if price can close above 12,158, you should see a move to 12,449. The 60-minute time frame chart's got a Rhodes momentum indicator bottom. It's got a TD 9-count bottom. What price has been unable to do is take out its resistance level. So this is a cool one. This is at 12,145. So that's the first resistance area that we would get to that you would most certainly want to monitor. Why? Well, first, that's a bearish structured 60-minute profile. And if price is able to close above 12,145 on an hourly time frame, that's going to signal move to the 12,290 area. Now, what happens if these bottoms just don't take hold? Well, then what we're watching for is the low of the day. Right now, that low of the day out here in the session is at the 12,034 level. Now, I don't really know what's going to happen between now and 2 o'clock, but assuming that that stands into 2 o'clock, if we see price then close below that, this is a 5-hour chart out here, but if we do see price close below that, that tells us we're headed lower. Now, if we do head lower out here inside the NQ, you should be aware that you've got support at that 11,975 level, or at least you should. Now, even though it's not shown here, there is an A to B equals CD down pattern inside the NQ. If there is a bullish reversal candle, I would not expect that to occur today at all. But if there is a bullish reversal candle, well, that would confirm a Gartley buy pattern. So overall, in summation, with regard to the NQs out here, in fact, what I will do is I'm going to open up my TAS. Not that one. I need to open up my TAS scanner. Let's just go see what market breadth is doing out here before we move off of the NQ charts, just to see if the wind is at our sails. We're running right into a headwind out here. So no, I don't want to do that. Let's do this here. Let's move this over, and the S&P, let me change this to the NQ, and then I'll just move this over to your screen so you can take a look at it. So interestingly enough, on the 60-minute time frame, and I'm going to also get the 30-minute charts here rolling just so we can see if we've got a both the 30 and the 60-minute that are in bullish crossover. So you're looking at the upper right-hand panel out here. In fact, what I'm going to do is just simply open up the chart for this. Makes it a little bit easier. It's a little bit more visual. And what we can see is right now as we speak, actually, we're pretty much even Steven. There's 31 instruments trading above profile and 31 trading below profile. So we're kissing cousins as we speak right now. But if we do get that crossover, that's going to be an indication of a further, or we should at least see a further rally on the 60-minute time frame. Now, I'm going to come over and take a look at the NQ for its 30-minute time frame. Let's see what we have going on here. So on a 30-minute basis, we've got a bullish crossover. 40 above, 16 below. That bullish crossover, this one here, most recently occurred at exactly 10 a.m. So 10 a.m., that's when we had that bullish crossover. It's lasted for an hour. Maybe it's going to continue further. But when we go back now and take a look at the NQ charts out here, so the 240-minute time frame, it's still with a bearish crossover. And the daily time frame, 22 above, 32 below. So that also is on a bearish crossover. But the 30-minute and the 60-minute charts out here. So again, watch them at 60-minute basis. Got to watch at 12,145 level. If you get a close above that, that is most certainly going to suggest a further rally is likely. So that's what's going on inside the NQs out here. We've just got a few seconds before we go to a break. When we come back from that break, we'll take a look at the charts here for UVXY for Dan inside the Tiger's Den, which, by the way, UVXY, when it did bottom out here on the trading day of February 2nd, it was a TD 9 count. And now what price is doing is trading above the top of its breakout level at 557. You know what that means? Typically when you close above one breakdown resistance area, you go to the next one. Well, the next one's up at 715. But we'll further take a look at these UVXY charts as soon as we get back from this break. Steve Rhodes with TFNN.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We're going to go back to the UVXY charts here in a moment. I'm just running the UVXY, its holdings are primarily the March futures contract for the VIX, and it does have some of the April, about 23%. I don't know that those percentages are correct, but there's about 7,100 contracts that make up the April contract and 35,000 contracts that make up the March contract out here. But let's go back to the UVXY charts here for a moment, and then we'll come back and take a look at what's going on inside the future contract there for the March timeframe. So as we mentioned, price here is above the it's a TD9 count breakdown level. I mentioned earlier about an A to B equals CD pattern that I'd spotted inside the VIX. Now, as I mentioned, I have not done any work on that to understand whether the VIX index really respects those A to B equals CD patterns. But here with the UVXY, Dan, you can see that this has also got an A to B equals CD pattern. It's a price projection, 1-to-1, right about the 588 area. It just says if you were to get a bearish reversal candle, well, that would suggest that this would have formed or will form a top. Now, the next area of resistance for this is up at 648, which is the top of its weekly profile. So that's what I see when we take a look at UVXY charts out there. If we go back and take a look at the March contract, what I'm more interested in here is what's going on an intraday time period. So when I look at the 5-hour time frame chart, I can also see an A to B equals CD, as can you. Let's just simply draw that in because this pattern may have completed, or what I should say, may have confirmed. Only one way to find out. No, I don't think it has because that is a much, well, let's just make sure. Sometimes my eyes lie. Come on, grab that. There we go. So here's the, oh, it did. So Stevie takes that back. So what we have out here is we do have a confirmed sell the D point, Dan, on the 5-hour time frame chart. You also have a wave number 7 pattern out here, but more importantly is really the sell the D point with that bearish shooting star. Now, what you want to watch here is certainly the bottom of its 5-hour time frame profile. And that's at the 2244 level. And the oscillator and change line is right above that at 2245. So a close below that is going to suggest that there is a further retracement. Just do your Fibonacci retracements of that A to B equals CD on the 5-hour time frame, and you would use those levels as potential areas of support. In the case of the 4-hour chart, you've got a TD9 count top. In the case of the 2-hour chart, you have a Rhodes Momentum Indicator top. Now, price is not broken through any levels of support, as you can see. The key level of support here, well, on the 4-hour chart, it's going to be 2246, which would then, if you get a close below that, 2145 is where you'd be looking at. On a 2-hour chart, the key levels of support right now are 2256, 2216, and then 2145. You've got a confirmed Rhodes Momentum Indicator top on the 60-minute chart. You do on the 30-minute chart. You've got a TD9 count top on the 15-minute chart. If price closed below 2260, that's going to suggest lower price out there. So the UVXY, even though the daily looks pretty good, when we start taking a look at all those intraday charts out here, it's either just a period of time for the short-term pullback here, maybe a little bit more of a rally, although I see the Spinny's down about 2 points out there, but just kind of chugging along. So, Dan, that's what I see when I take a look at UVXY as well as the contract, the primary contract that makes up that position out there. So best of luck to you, and thanks so much for the request. The next request coming in from Ray in Sarasota. And Ray wants to take a look at Yamana Gold. Ticker symbol is AUY. Those are the charts that we have up on our screen. What you will see out here, Ray, is there's well, specifically your question was, where is support and resistance for Yamana Gold? On a daily time frame, the area of support would be 468. The reason is because price is below profile levels. I don't have a TD9. That's the next TD9 count breakout area that I have out here. So $4.68 would be the number. Now, even though I say that, you can see there's an A to B equals CD pattern that I've drawn in here. You will also notice in the case of Yamana Gold that today is going to confirm a TD9 count pattern. Today is bar number 9. Now, Ray, the low can form on the bar following bar number 9. So it's low for Yamana Gold. You know, what you'd love to see here is a TD9 count and a bullish reversal candle all at the same time. And then that would be telling you that you have at least a short-term bottom. Now, you asked about resistance. So in the case of resistance, if on a daily time frame you do get that short-term bottom signal, resistance is going to be the bottom of its daily profile and its oscillator and change line, both in about the 553 area. So that's going to be your resistance level. On a monthly time frame, on a weekly time frame, by the way, there's no levels of support. We're below profile and getting all the way back to its breakout levels in the $4 area out there. You can see on a monthly time frame, price is testing its green oscillator and change line. If price on a monthly basis closes below that, you've got support at 510, and then below that area 415. If I look at the 30-minute time frame for Yamana Gold out there, knowing that today is a bar number 9 of a TD9 count, what we look for here is some type of confirmation on a short-term time frame that a bottom is forming. We do have a Rhodes Momentum Indicator signal that is present. Price would need to close above 535. You are at 523 right now. A close above 535 would suggest, at least on the 30-minute time frame, that you have a change in trend, and that may carry its way through to the daily time frame and that confirmation of a bar number 9, which is going to, well, the only way that that doesn't happen today, we get a confirmed TD9 count, is for price to close above 546. So if that happens, then that pattern gets negated, but that would be a heck of a buy the D point signal out there if that were to unfold. So Ray and Soda, nice to hear from you. I hope that helps you out. If not, right back, and I'll try to get you the information that you're looking for. The next question is coming in from David in Tomball Tech. No, that's David in Panama City. And he wants to take a look at that Tesla. How far should Tesla pull back over the next couple of weeks? Well, let's get those Tesla charts up on our screen out here. TSLA is the ticker symbol. Let's get a feel for what it's doing and maybe where there's some levels of support. Well, it's trading into one level of support out here as we speak, David, and that is the bullish structured profile area. That zone is between 187.56 and 191.97. So you're saying, where should this pull back to? Well, you do have a confirmed Rhodes Momentum Indicator top. And where it should pull back to is where there's support. Well, it's done that so far. It's at least at the top number in that 191.97 level. So that's an area of support. Now, if price were to close below 187.56, your next area of support to the downside on a daily time frame kicks in at 134.27. If I look at a weekly time frame, no bottom pattern or signal out here. You just have an inside bar. That typically means that the trend that's in place should continue, but the week is not over. It's only Wednesday. On a monthly time frame, you've got a confirmed by the D point. Price found resistance where it should have, which is inside that bearish structured zone. So that's where the battle is. That's between 205.55 and 228.76. So your specific question is, how far should Tesla pull back over the next couple of weeks? I think, David, you've got to watch this support zone of 187 to 191. Now, if that's going to be a bottom, we should see some type of signal from an intraday chart. Well, it's a 30-minute chart that I've got out here, and on a 30-minute basis, looks like you have a confirmed by the D point pattern. We'll just simply make sure of that. We'll draw on the A to B. We'll just simply draw that over to the C point out here, and let's see if this, in fact, completed that pattern. Not exactly, but not that far away. So we'll call it a not exactly just yet. But on Tesla, watch 196.87 or 88, right around that area. If you close above that, you should get up to the 200 area. So I hope that helps you out, David. In Panama City, with regard to Tesla, price right now trading into support. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I'm going to go back to that Tesla chart here for one moment. I had put up the chart that shows the consecutive down days, consecutive up days. We can see Tesla off of the bottom that formed here on January 16th. It's only had really one pullback of any significance. It was a two-day pullback, kind of normal knee-jerk reaction low. That was on February 13th. Today looks like it'll be bar number 2. So watch that. If we do get a third bar to the downside, could be suggesting a little bit of a change in trend in there. But remember, prices still got to bust through support. and that support level being the 187 to 191 area. Let's go to our next question out here. That question coming in from Tim. Tim writes in, and let's find out what Tim is asking for. He wants to look at Apple. We got the Apple charts up. So I like to short Apple. When do you see proper time to take a bite out of the Apple in the daily or the weekly time frame? So in the case of Apple, it's got a TD9 count top out here. That took place on February 3rd. So, that any of the time frames, up and really through, well, the best time to have sold was when price was up at resistance. And that was up at the top of that profile, 155.77. Now what you have is prices below the bottom of its daily profile. It's bullish in structure. A second consecutive close suggests that price should head to 137.90 out there. As far as where you should sell it, if we were to get a bounce, and we'll take a look at the short-term time frame chart, see if that's in. We'll take a look at consecutive down days and so forth, see if that's a possibility. If we do get a bounce, then the next best sell spot is right around 150.96. 150.96 is the center of its bearish structured profile. If a counter trend move is just a counter trend move, then that's where price would find resistance. Now, it could be at 149.35, but the more ideal spot would be in that 150.96 area. And if that happens, then you could see an A to B equals CD pattern that is unfolding out there. If I look at the 30-minute time frame chart here for Apple, what we're going to see is that it has a TD9 count bottom that has been confirmed and will complete at 12 noon. That means there can be a lower low. What you're really watching for here in the case of Apple, for this to get traction, number one, is that price must close above that red oscillator and change line. Turns out that's also at about the bottom of its 30-minute profile. 148.16 is the number. If price trades above that, closes above that, I should say, then we should see a move to 148.92 and 149.42. That is a slightly bearish structured 30-minute profile. If the bulls can plow through that, then their next round of sellers, they reside at 150.02. And if price can take that out, 150.02, well, that tells us that we should have a further bounce that is in play. And then that's where you'd be looking at that 150.96. Because we have that TD9 count bottom in place for the 30-minute time frame chart, I would not suggest jumping on a short side of Apple at this moment. You got to wait to see how this pattern here plays out. Now, it's very, and remember, we're in the bar following bar number 9, so it's really the low of the pattern, wherever the low of the day is for Apple at 12 noon. That's going to be the key threshold area that you watch out for. If price were to close below that on the 30-minute basis, then I can understand jumping to the deep end of the pool, holding your nose and hoping for the best out there. But do remember, or maybe you don't remember, we are in extreme oversold conditions out there, and that says that we should see some type of relief rally. We should see some type of relief rally. So I hope that helps you out. That was for Tim M. Next question in the Tiger's Den coming from McGuppy. McGuppy would like to take a look at BTAI. BTAI, and the question there is really, I believe, where is this pulling back to? Well, the first thing we know about Bioxyl Therapeutics is it is testing support. Well, actually, the first thing we know is this formed a Rhodes Momentum Indicator top. It does it with a dark cloud cover. That's on the trading session of February 9th. Now price is testing support, and that's at 29.43. So McGuppy, if price breaks through 29.43, and price right now is pulling back, the volume on this today is 404,000 shares. It's going into a swing point from February 1st that's at 439,000 shares. So price is pulling back into the swing point right here with volume. If price closes above the high of that candle, from the from the 31st of February. Did I say 31st? No, I meant the February 1st. The high there is 29.60. We're at 29.89. Even if price tests and rejects that level today, price should get back and at least test that high again. And again, that high was 29.60 out there. But BTI is back at support. Well, if you're back at support, what's going on the larger time frames? Well, it turns out not much. On the weekly time frame chart, don't have any kind of a signal as we speak. On the monthly time frame chart, we have prices dealing with resistance at 3206, and at 3640, there's additional resistance. Well, what's going on the short-term time frame? We know prices moving down with volume. Will it hold that support level? Well, as we take a look at a 30-minute time frame chart here, we don't have any indications to suggest that it will. However, we can pretty much see a consolidation pattern that was in play here, and it has made the measured move of that pattern, and price pulling back to its breakout area of 2906. Well, bring it on home, Stevie. The only bottom pattern that I would see out here on this 30-minute time frame is a confirmed or is a completed measured move of a consolidation. Now, you may say, hey, Stevie, I don't see that consolidation. Can you draw that in there? Okay. For whoever it is that said that, and it could just be me out there, I would draw in the consolidation right about here. So here's the consolidation, give or take. That seems to be pretty good. And all we now have to do is take that consolidation pattern, move it down towards the bottom of it, and you can see this made a move equal to or greater than that consolidation. Does that mean the move lower is over? I can't say that with this 30-minute time frame chart because I don't really have a bottom signal out there. So it may continue to move lower. Again, watch 2943 out there. That's ticker symbol BTAI. Today is going to be bar number 4 to the downside, consecutive days that is. Last time we saw a 4-bar reversal was back here on November 3rd, and then price started to basically motor on and move higher out there. So for all intents and purposes, BTI should form at least some type of short-term bottom as we speak today. Let's go to our next request. That's coming in from Duncan Steve. In Dunkin' Donuts, he wants to take a look at AMD. So let's get those charts up on our screen out here. In AMD, the question was, I think it maybe was just to take a look at it. You were not in a position. So as we take a look at AMD, we can see that it's trading right now back inside its daily profile. What kind of top did it form out here? Well, I can see a sell the D point top that was confirmed with that bearish shooting star candle back on February 3rd. Now, if price closes below 77.10 today, its next area of potential support is at the 75.41 level, and below that 73.72. Now, let's let our eyes move over to the weekly time frame chart. Brand new weekly profile. It is bearish in structure, but price is above it, so the message there is bullish. Where is support here? Support would either be 74.50 or 71.61. So if you're looking to get into a position here, which I believe that you are, we've got to sell the D point pattern. We're back inside profiles on the daily time frame. I would look at the areas of 73.72 to 74.50, and I'd be wanting to see some type of confirmed bottom signal on some intraday charts. 30-minute is one of those. Now, turns out that right now what's taking place inside of AMD as of 11:38 is we have the potential for by noon to get a 30-minute Rhodes momentum indicator bottom. Price right now is taken on profile resistance area 76.75, but the real key one, because this is a slightly, I do mean slightly bullish structured profile, 77.14. If we get it close above that, you should see a move to 77.74, and a move above that, Duncan, then you're off to the 83.26 level. I don't have any indication that that's what's going to happen out there. Bigger picture is it does look like AMD wants lower price. So hope that helps you out. Next question we're going to go to is Baidu, and that's for jambalaya inside the tiger's den. Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. You got the Dow up 40, the S&P's up 1, NASDAQ is up 3, Russell's up 7, semis are down 8, trend is off 14. We're taking a look at the stock charts here for Baidu. We take a look at Baidu right now. And now, what was the question? The question was, is Baidu headed down to 130? I believe that's from Jambalaya. Well, 131.01 is a TD9 count breakout level. 132.15 is the bottom of its profile. Is a slightly bullish structured profile, and price so far has tested support, and that's at 135.57. That is the bullish structured profile area. Now we do have a confirmed Rhodes momentum indicator topping pattern out here, but your question was, will it get down to 130? Maybe an easier way to answer that is look at what's going on in the 30-minute time frame chart. In other words, what I'm saying is price is back at support. Do we have any support here? Well, this is not going to help me a lot, or maybe it will. You've got a wave number 7 pattern. That is letter G on my screen out there. That has been confirmed. So now what you have to watch is, how does Baidu deal with resistance levels? The first resistance level out here, Jambalaya, is going to be about 137.71. The second resistance area is 138.66. The third one is at 140.23. The fourth one is at 148.10. And the fifth one is 150.21. Those are all battlegrounds should price continue to rally. And you need to watch and observe how price deals with those areas. But we don't. We do have that wave 7 bottom on that 30-minute time frame. So if the first area, which was the 137.67-ish area, the red oscillator and change on it, price can get over that, that would be a positive, knowing that on a daily base, you've got a nice move, nice wide-ranging bar, but price pulling right back into where the buyers are sitting at. That's between 132.15 and that 135 area. So I hope that helps you out. Jambalaya, with regard to Baidu, your question was, will it get down to 130? Not certain about that. I watched that 30-minute time frame chart to assist you with that. Duncan Steve also wanted to take a look at Berkshire Hathaway, BRK, _B is how I get to that symbol. If we take a look at the daily time frame, let's open this up here. What do we have? So we got price pulling back into a prior swing point. The prior swing point was December 20th. Volume was nearly about 3.1 million shares. Yesterday, you pulled back with 4 million shares. So it says we were pushing into that swing point with volume. That's the reason that we're still in it today. Now, today, in the first 2 hours of trading, it's only done 697. So we can see that sellers have dried up as Baidu is dealing with that swing point here. Now, what it would need to do is close above the high of that swing point, which is 304.19, in order to generate a in order to generate a successful test and rejection of a swing point with lighter volume. So watch that area. You certainly have the lighter volume. You don't have the price as we speak. What happens if price closes where it does right now? Well, you've got an inside bar from yesterday that says the existing trend were to continue. That trend, since price did close below its breakout level 305.24, would be to the downside. So that's what I see when I take a look at the daily time frame chart here for Berkshire. If we take a look at the weekly chart, price is sitting at support. 301.86. Price needs to close above that come Friday. Otherwise, that's going to suggest lower price. The monthly time frame chart, price did close above for 3 consecutive months above the top of its bear structured profile. That was an indication that it wanted to get all the way back to its highs, but right now it's back inside that profile. That just means I'm going to defer to the daily signals and the weekly signals out there. So again, on the daily, all that we have is a test of a swing point. Yesterday was with lighter volume. Today it's with yesterday was with volume. Today it's with lighter volume, but price has to reject that swing point. That's going to require a close above, I'll give you that number one more time, 304.19. So I hope that helps you out. Duncan, Steve, thank you so much for the request. Let me see if I've got any other ones that have come in. Looks like we do. Peter wants to take a look at the NYSE Advanced Decline Oscillator. So we'll do that. We'll switch over to that. Give me a moment. And while that's going on, I'm going to open up. He'd like to take a look at the euro. So let me open up my euro trading charts out here. Get those going while we take a look at the black background screens. Give me a moment to do that. Okay, we've got that. Now let's switch over to the Advanced Decline Oscillator. The Advanced Decline Oscillator reading, as we speak right now, is down at minus 180.76. Yesterday, it got down to, it closed at 240.21. When you get down to minus 150, Peter, as you know, that's when you're moving into the overbought area. This condition needs to work itself off out there, so that suggests that we could see or anticipate a bottom. That was another reason I mentioned it, but I didn't follow through with the thought when Duncan Steve maybe was looking to short Apple. Knowing that we are in this oversold condition, you'd really want to wait for that bounce to unfold. Not that we can't get more oversold, but the higher probabilities that we get some type of a bounce that you could sell into. So that's what the Advanced Decline Oscillator looks like. You wanted to go take a look at the euro as well. So for this, we're going to change our paneled screens out there. That's just so that Mr. Bill doesn't hit me upside my head because I'm on the wrong screen. So now as we take a look at the euro, what do we want to look at out here? Well, if I take a look at a daily time frame, let's pull this back. And what we have on, let me pull this back like this, spread it out. So what we have on a daily time frame out here is we do have an A to B equals CD to the downside. It looks like this. The A point is easy to identify, the B point as well. That happens to be the trading session from February the 13th. Now, if we just move that over to the C point, that was the high of the following session on the 14th out there. Happy Valentine's Day. That would suggest that where the euro is targeting is about the 1.0417 area. What we also see is today is bar number 6 of a TD9 count. So this could form some type of TD9 count bottom pattern. It could begin to form it as early as Friday. But between Friday and Tuesday of next week, you could get that pattern. We'd want to come back and take a look at that, Peter, out there. But right now in a daily time frame, no bottom signal. On a weekly time frame, price may be targeting its green oscillator and change line. That level's at 1.058. Now let me open up the weekly chart out here. And on a weekly time frame, what we have is a confirmed sell the D point pattern. I need to get a swig of water. Oh, and I got an ice cube. Sorry about that. I try not to crunch it, but that's almost impossible while I'm talking. So we're going to crunch it. Okay, so here's the A to B point, and you can see we're well beyond that when I apply that to the C level. So you've got a sell the D point, took place with that shooting star candle. Here, typically my experience with shooting stars is they either work or they don't. This one here, it worked on the very next trading session. So price should get back to that 105 area. If, in fact, price closes below that, Peter, then that's going to tell us there is a further retracement, and that's where this A to B equals CD down pattern on the daily time frame would probably kick in out there. From an intraday standpoint, I've got a 5-hour TD9 count bottom. That looks like that may form by 2 p.m. You've got a TD9 count bottom pattern on the 30-minute time frame chart. That's still in play out here with prices consolidating with inside its profile. Resistance up there is at 106.5. So, Peter, I hope that helps you out with regard to both the euro and the advanced decline oscillator, and thank you so much for the request. Did I look at natural gas? I did not, and I think somebody had a question. Might have been Coda, and if so, I apologize there, Coda, for not doing that. We get back from this break, we're going to look at natural gas. That's for Mike and whoever else asked me to do that, but we will get that right away. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're taking a look at the charts here for natural gas. The real setup here is if you look at the weekly time frame chart, you will see this the week following bar number 9. So there should be a TD9 count pattern that's going to complete. There is a TD9 count pattern that's going to complete here on Friday. What we're watching for is some type of bullish reversal signal to confirm a Rhodes momentum indicator bottom pattern on the daily time frame. The weekly says we should see a bottom. We come over to the daily time frame to see if we've got any signal. At the moment, as of 11:54, we do. What you have here is you have a bull sash candle. Now, what I don't know is whether or not we will have a bull sash candle at day's end. If we do, then we've got a signal to take a entry along position into natural gas, knowing that you have a battle at 262, 277, and 287, and above that, a 337 level. Now, what price should do here, if we look at the 30-minute time frame chart, this is completed a TD9 count top. What you should see is a stalling of this advance. And that also, that TD9 count top took place right at its breakdown level of $2.34. We should see price target its green oscillator and change line. It could be a combination of price moving sideways, the line moving up, price moving back. I don't know what the combination is going to be. But if price does test and rejects that green oscillator and change line, wherever it's priced, which is currently $2.25, that would be your potential, that would be your signal to come into a long trade. Ideally, you would like to see this still hold its bullish reversal candle in order for that to happen out there. So that's what I see when we take a look at natural gas, even the 60-minute charts in bar number 9 of a TD9 count, 120-minute up at TD9 count breakdown resistance. So we should see pullback. Doesn't guarantee that we will, but we should see a pullback. We had a request out there to take a look at the 30-year Treasury. As we pull up those charts out here, the 30-year Treasury, the daily time frame shows that price yesterday negated a TD9 count bottom. That suggests lower price. Lower price to where? Well, it has to go back really into those October lows, but that's assuming that we see a close, because there is TD9 count threshold support that, no, it broke through that as well. But if we see a close below 124.11 or 124.19, that's going to open up the door 119.25. With regard to end-phase technology, that was a last-minute question that came in from Vic. We take a look at this. What do we see here? We see on the weekly time frame, what you don't want to see is a closed below 199.03 this week. We'll see you tomorrow, folks. Have a wonderful Wednesday.